Hello everyone, welcome back. Patrick here with another review slash update on MGM Resorts. This is a video I've wanted to make for quite a while now. This is a stock I'm very bullish on. In my opinion, it is a total package. It combines both growth and recovery at the same time, and when you have that mix, you get a stock that will outperform as it has over the past few months. So a few months ago, I made this video called 3 Best Gambling Stocks for 2021. I hope you watched it. I hope you picked one of them because they have been doing amazingly well. My top 3 picks were MGM, DraftKings, and Penn National Gaming. MGM is up 44% so far, DraftKings 40%, and Penn National Gaming up 69%. It's hard to ask for more for these types of companies, right? So today I want us to look at the components of the business. Where are they at right now? And more importantly for the audience, is there still meat on the bone, right? Are they going to continue growing, or is it a plateau now and we can't really expect the share price to grow from here? So I hope you guys enjoy it. This is a video I've wanted to make for a while. So now let's get started. And of course, I'm going to remind you once more, please like and subscribe. It really helps out. Alright friends, before we get into the numbers, projections, the charts, how I'm going to be playing the stock, let's talk briefly about what the company is about. So you probably know them for their physical casinos on the Strip. That is what they're best known for. You have the Bellagio, the Aria, MGM Grand, the Mirage, Luxor, Excalibur. Quick story, I actually managed to stay at the Bellagio with my dad a couple of years ago before he passed away. So for me, of course, it has sentimental value, but I'm really curious, what is your favorite casino on the Strip? So if we go back to this, last year, all of these were closed, so that really hurt the company's revenues, of course, right? Their revenues plummeted and that crippled the share price. Now in 2021, though, we are seeing the reopening of the economy, and all of these are reopened. Some of them, if not all of them, are back to 24 hours a day operations, and that is going to help the company get much more revenues from these properties, of course. Plus, remember that there is a lot of pent-up demand, both for casual travelers like us that just want to go as a vacation, but also from business travelers and conventions. So, as far as I know, they're not really having conventions yet, but they are in the process of scheduling them probably for the second half of the year, 2022, 2023. My assumption, my expectations are that all of these properties are going to see a lot of growth over the next 5 years, right? So some people think that it's going to stop at where they were in 2019. I don't think that's the case. I think that these are going to see massive traffic over the next few years, and the revenues are going to be like all-time highs. Other parts of the company that you might not be as familiar with but are very, very important is their regional casinos. So they have casinos in New York, in New Jersey, Detroit, Michigan, in the South. And the reason why these are very important is not only did they help the company go through the pandemic, because most of them have been open for several months now, but they are also helping them anchor their online platform. So we'll talk about the online platform much more later on in the video, but for now, just keep in mind that whenever they open the sports betting or iGaming in a new state, well, they need to be attached to a physical casino, right? So the fact that this company has several regional casinos already creates a lot of synergy that some other competitors do not have. So we'll look into that later. Other properties that they have, of course, are in Macau and China. Those we can assume are going to reopen over time. These are all the physical casinos. This is the recovery aspect of the business, right? They also have some projects in Japan, but I am not as familiar with these, to be totally honest with you guys. Now, the second part of the company, though, is their online platform. This is the actual growth aspect of the company. BetMGM is their partnership with Tontine, which they tried to acquire a few months ago, but unsuccessfully. So they have been launching this in every state that's opening up. And as we'll talk about later, they are seeing pretty impressive numbers. When I listened to the call for the latest quarterly results, I mean, I was very, very impressed with some of the numbers that they are talking about. Like, there is huge synergy between their different properties, and that is really, really positive for the future. Let's go back in time for a minute to 2019, before the disaster of 2020, when this company was booming. Now, let's not mince word. The company was doing fantastic. So in 2019, this is their annual report, they generated $12.9 billion in net revenue, of which 2 billion was net income. So that's not just revenues, that's actual profits. And what did they do with this money, right? Well, capital allocation returned 1.3 billion to shareholders through buybacks and dividends. That sounds pretty good, right? And then they fortified their balance sheet, reduced their consolidated debt by nearly 4 billion. So the company was very solid back then, and that's one of the reasons why in 2020 they were able to survive despite having their revenues completely crippled. And back then, those revenues and profits don't even include the online platform. At the time, they were still just working on it. Continued progress in sports betting with GVC Ventures Roar Digital. It wasn't even a thing yet, right? So that's why the company is so exciting. This gives us a glimpse into the future of what we can expect, not necessarily in 2021, which is still a transition year, maybe not even fully in 2022. You know, it's still going to be ramping up. But starting 2023, we might probably see numbers like these or even better, potentially. That's what I'm assuming. Then if we look at the numbers, right, 12.9 billion in 2019, then 11.7 in 2018. So every year the company was growing their revenues. Now, don't get me wrong. We're not talking about a company growing at 20, 30% per year, right? It's not that kind of company. I'm not going to pretend that it is. But they were growing at a nice 10% per year. And again, this did not include their online platform. For a company of this size that has a lot of physical assets, growing 10% per year, there's nothing wrong with that. So if you go back and look at the chart in 2019, they were at that $30 mark, right? And now they passed it to $40. So we just saw the share price, and I already know what some of you are saying. Why is it higher than in 2019? Is the company overvalued already? That's a great question, but it's a little bit tricky because in the first part of the video, we really focused on the recovery aspect of the business. Are the physical casinos going to go back to where they were in 2019, where the company was profitable, and expand from there? In my opinion, it's almost guaranteed that they will, right? Unless there's a catastrophe or of some sort. Right? But they will go back to where they were in 2019. They're going to generate a lot of revenues, some profits, we'll get those buybacks, those dividends, all of that good stuff. But if they succeed on that, that would make the company decent, but not necessarily amazing, like not something that I would be extremely bullish on. What really sets it apart for me, what makes it me want to have it in my portfolio, is the growth vector that is going to be their online platform, BetMGM, which I believe is very underappreciated and undervalued. It's kind of flying under the radar right now still, for some reason. So if you ask anyone about this industry, right, sports betting or all of that, they're probably going to talk about, let's say, DraftKings, all the ads on the Super Bowl and on TV all the time. FanDuel, they have billboards everywhere. Or you're going to hear about Penn National, Golden Nugget Online, all of those companies. Almost no one is going to talk about BetMGM, even though they are really well positioned to capitalize on this industry in the next few years. So they are very underrated. So according to their latest numbers, they had 17% of the market share and growing, whatever that means. But if we look into the synergies with their physical properties, in my opinion, that is their secret weapon. That's what makes it so powerful, is that the best way to acquire players is to have a large audience and then funnel them into their other products, which is what they're doing right now. If you've ever walked into a casino, you probably got the loyalty card, right? In this case with MGM, it is called the M Life Rewards. So they have 35 million members in that rewards program. So whenever they open a new state, they're going to funnel some of their members into becoming players. Currently, 17% of the new BetMGM signups are from the M Life program in the fourth quarter of 2020. That is very important. That allows them to open on day one and, generate some revenues. But if you add to that the fact that anyone that signs up on BetMGM, right, that never really became part of this program before, well, 39% of them become part of M Life. So all of those guys end up in the same database, and that allows the company to cross-sell them on different products. Now, not only that, but I heard from the CEO on the quarterly call that they're going to be accruing points, right? Regardless whether they're playing at the physical casino or online. And then what are they going to be able to do with these points? Well, they're going to redeem them for experiences. So whether that is a show at one of the properties or a 2-day weekend, stuff like that. So those rewards are going to make people have more points of contact with the company and increase the revenues. So that's pretty obvious, right? The more times you interact with BetMGM, the more money that they're going to make from you. The good old ARPU, average revenue per user, that everyone is fighting over. So it kind of looks like this, right? The more contacts you have with the company, the more valuable you are to them. But it goes further than that. With all the systems that they have in place already, it's allowed them to open in day one in different states. So Tennessee, Michigan, Virginia, when they open here. And in the first few weeks, it really allows them to get customers more cheaply. There's not nearly as much competition. So according to the CEO, once again, and you can see it here, it costs them less than $200 in the first few weeks to acquire a customer. And that's why they've been able to really expand their market share. And even in states where they're already present and they were not number one, well, they're really fighting hard right now to increase their growth rate and their market shares. So let's just make it very easy. Right now, the company is not number one when it comes to sports books. That's going to be DraftKings and some of the other players fighting for number one and number two, but they are number three in the different states, right? So that sounds, hey, they're only number three. That doesn't really matter, right? Number three is already good, but the thing is that they're number one when it comes to iGaming. And what you need to understand is that if you know anything about this industry, the casino players are much more profitable than the sportsbook players, because the average sportsbook player is not going to generate that much revenue for the actual company, right? As opposed to the casino players, which, according to the CEO, once again, they're converting 30% of their sportsbook players into iGaming players. And that is huge, because someone that plays blackjack is going to generate much more revenues for the company than someone betting $10 on football every weekend. So this is why, like, the company, in my opinion, when you combine those synergies and the fact that they have such a good conversion rate, is doing amazingly well and will really reap the benefits over the next few years. So if we look at that as far as numbers go, in 2020 they generated 178 million, which, you know, in the grand scheme of things, let's be honest, that's not that much compared to the 12.8 or 12.9 billion in revenues from all their casinos together. But it is growing, and last year was not a good year. This is just the beginning of this industry. A lot of the states aren't even open yet, whether it's New York, California, Texas. But more importantly, right, in 2021, the net revenues should grow well over 100% versus 2020. Alright guys, in the wrap up to this video, we have talked about the difficult things, which is valuation and where is this share price going in the next year or two. Because let's face it, for us to make money, it needs to go up from where it is right now at $40. And it is higher than where it was in 2019. So we need to think about this carefully. Now, I think that there is still money to be made, but let's be totally honest, right? Very blunt about it. The easy money has been made. I remember last year there was a lot of chatter about this stock when it was in the low 20s. That was a great spot to enter it. In December, when I made the video, it was still at $30. That was a great spot to enter it. Right? I have $10 in equity right now. I'm just sitting back. I can wait and see what numbers are going to be this year. Now, does that mean that at $40, it's too late and there's no money to be made? You have to be a little bit more careful, but it doesn't mean that it's a bad deal by any means. Here's why I'm saying that. Right? So the valuation right now is at $19.8 billion. Of course, it's higher than where it was before. But you have the analysts that are saying that the stock is going to go to $50, $42. They just increased it to a buy rating recently in the past few weeks, right? And then previously it was hold at 40, 35, and 38. So we all know that the ratings are not necessarily super accurate. Sometimes they're chasing the actual stock price. So as the share price goes up, like it did here, you know, it crossed the $40, well, you get new ratings that are higher. But still, if you look at all of what we talked about in this video, depending on how you value like the BetMGM platform, depending on what kind of numbers they're going to put in the next few months, right, in the next couple of quarters, it is very likely, in my opinion, that we are going to see something above $40. At some point, we're going to hit a resistance. I'm not sure if it's going to be at $45, $50, or are going to retrace a little bit from where we are right now, which would be a good buying opportunity. But if we look at their estimates for the revenues and the EPS, Well, right now we have the revenue estimates for this year. The growth is going to be 67%, but that doesn't tell us much because, of course, the growth rate is going to be higher based on the disastrous year that they had last year, right? So, of course, the numbers are going to be much better. Next year should be 32%. That's good. And if we look at the absolute numbers, right, next year the estimate average would be 11.43 billion in revenues, which would be about where they were in 2019, a little bit under that. But so if we understand what this means, that this year is kind of like a transition year, next year would be stabilization year, and then 2023 would be expansion year where they'll go back to making profits and growing again. So it is more of a long-term play for myself, for sure. And now let me show you the last thing why I'm making a pretty good amount of money with this stock. Well, if you've ever watched this channel in the past, you know exactly what I'm about to say, which is sell covered calls on your position. So that's what I've been doing in the past 3 months, and this is not exactly accurate because I don't know why. This is a tattooed chef. I rolled my position in the past week. So if you add that, it amounts to about $1,500 over the past 3 months. So $500 per month just selling covered calls on my MGM, which if you look at the chart, right, a lot of people are curious, well, how do you actually sell covered calls and sell options when it's going up? You do exactly that. I mean, you just roll out and roll up when the market goes against you. And when it stabilizes and it trades sideways, you collect the full amount of money, like I did that time for a profit of 632. So it's no big deal, right? This is how I'm monetizing this company, which if it keeps going up, I'm making profit. And even if it doesn't go up, I'm just using it as a cash cow. $500 per month, that's not bad, right? And if you look at it, the premiums are pretty good. At the money calls are $1.35 right now for, you know, this, you need to know what you're doing. But another option for people is to just sell puts on it, right? And then you can either be assigned for cheap or you can collect the premium. That's another option. So you guys know that I'm not a financial advisor. I cannot recommend to buy or not buy any of these stocks, but personally, that's what I'm doing. I like this company. I think they have a lot of good years ahead of them, and I'm going to be holding this one and making great profits with it. So let me know in the comments what you think, and I'll see you guys in the next video. Thank you.